So let's talk about agri inflation, commodity inflation. Obviously, this has been the talk of the town for some time now. When you talk about overall in the Q3 also, gross margins of consumer staple companies surely were impacted and were under pressure mainly due to the increase in the commodity costs. So consumer staple companies, most of them, like whether you look at soap companies, etc., they had seen an increase in cost, whether it was Marico, HUL, GCPL, they were seeing some high costs coming in, and obviously the gross margins of these companies were impacted, but the EBITDA margins, that's the operating performance of the companies as of now, were quite safe and was on the positive side. But now we're seeing an increase in costs coming for agri inputs also as well. While in Q3 there was not much of an impact coming in on the agri side as well, like wheat was quite flattish, even sugar was flat, milk prices were seeing a slight increase coming in Q3 as well, but coffee prices, tea prices, milk prices, wheat prices, sugar prices, all of them have been on the rise in the last couple of months, and surely that's going to have some impact on consumer staples gross margins as well. So maybe we could see a further pressure coming in on these companies as well. Now what companies have actually been trying to do is they're curtailing the overhead expenses to actually avoid the impact coming in on the margin. So whether you see some costs they're trying to wait, as well as the ad spends, they're trying to cut back maybe on that, and they're trying to stop the impact coming in on the margins further. But now with this increasing other costs as well of other raw materials as well, the impact on margins cannot be ruled out completely. And overall, talking about the Nifty as well, if you look at it, there are most companies, whether it's crude oil derivatives, fuel costs, transportation costs, packing costs, freight costs, all that also have seen an indirect increase coming in the cost. So surely there is going to be some impact coming in on the margins given the increase in the overall cost basket only that we're seeing. So that is surely going to see some impact over there. Now, if you look at low-priced inventories, that is something that did cushion the gross margins impact previously. But will that continue now? Is that a possibility? Which is very highly doubtful. When you look at consumer staples, they have inventory days of somewhere between 60 to 90 days max. So, that is somewhere that is the inventory days. So that also seems that cushion which they did have or they could have had also is now evading off. So there could be further pressure on the margins. So all in all, yes, commodity prices are rising. That's a concern for most companies. They've highlighted, some companies have surely highlighted there in the commentary in Q3 as well. And we're surely going to keep an eye out on Q4. And as of now, how these trends actually pan out, is it just something seasonal and maybe will they settle off? Some companies have also highlighted when we did ET Now did speak to them that yes, they expect this trend to go on for a couple of months, but post that maybe we'll see a reduction coming in the commodity prices. So let's keep an eye out on commodity prices, agri inflation, especially as of now what we're talking about, especially given the increase coming in coffee, tea, sugar, milk prices. So that's something interesting that we'll be keeping an eye out on. As of now, we'll surely watch out for these margins as well as the inflation in agri commodities.